Hello and welcome to The Bottom Line on TVP World, where we unpack some of the main business and economic stories of the day. I'm your host, Marie Kate. Germany's recent elections and Friedrich Merz's victory have thrown the country into a whirlwind, coinciding with escalating geopolitical tensions across the Atlantic. Defense spending has become a priority, leading us to perhaps soon witness an economic revolution in Germany. That significant policy U-turn may become the long-awaited economic boost for the country that may benefit Europe as well. Let's take a look at Jan Kennedy's feature for today.
Once the driving force of the EU, Germany has been struggling with an economic slump in recent years. In January, the bloc's largest economy exported 0.1% less than in the same period of 2024. Analysts say the uncertainty related to the new US administration's tariff threats is to blame.
If tariffs are imposed, buyers may struggle to sell their goods at competitive prices, making transactions more costly and less predictable. As a result, this confusion could be disrupting the usual rhythm of deliveries observed during this period.
Lower exports are only part of the country's woes, with industrial production remaining 10% lower than before the pandemic. This stems from the decline in Germany's competitiveness and is linked to chronic underinvestment in both the public and private sectors. However, the soon-to-be Chancellor Friedrich Merz aims to end Germany's frugality, and together with his coalition partners, he is advocating for a bold investment plan.
We want to set up a credit-financed emergency programme, a special fund of 500 billion euros for the next 10 years, from which these necessary investments will be made. We assume that this special fund will also trigger private investment on a large scale.
And a lot of work lies ahead.
Much of Germany's infrastructure, especially roads, built in the 1970s and 80s, requires complete renovation after 40-50 years of use. This is a natural process but requires significant financial resources. Similarly, the rail network and the energy grid will also demand substantial investment.
But stimulating investment in infrastructure is only part of the plan. Merz also aims to revive the country's arms manufacturing sector.
The necessary defence expenditure from the federal budget of Germany, above an amount corresponding to 1% of our GDP, will be exempt from the restrictions of the debt brake.
The debt brake is the biggest obstacle Merz will have to remove to get his plan going. It's a self-imposed restriction embedded in the German constitution that limits federal government's borrowing to 0.35% of GDP. Merz wants to change it even before the new Bundestag convenes, and the parliamentary debates are planned for this week and next. While the Conservative Party leader is yet to form a coalition and be named Chancellor, markets have already reacted to his plan with optimism.
I think defense plus construction plus to some extent a lot of stuff involved in metal bashing, that is companies that can retool towards the defense sector, plus some of the software that is needed for it, those sectors seem to be a fairly good bet going forward.
However, analysts say that the plan appears to be a double-edged sword.
Interest rates in the 10-year segment. Yields have risen by around 50 basis points on German government bonds. So the companies that are benefiting from the economic stimulus package naturally have significant upside potential. However, they will have to pay for this with rising interest rates.
All in all, as the Kiel Institute's recent policy brief points out, the markets interpret Germany's fiscal expansion as growth-enhancing rather than a reckless fiscal bet. Only time will tell whether Merz's initiative will be enough to lift the German economy out of its woes.
So in 2 weeks, we should know more. For now, we await the Bundestag debate and the lawmakers' vote. If this comes to fruition, the German political agreement will ditch the self-imposed deficit limits, which could make a real difference for the economy. As a result, it will be a while before these policy changes can take effect in Germany. But for now, we are joined by Carsten Brzeski, Global Head of Macro Research at ING, to tell us more about the unfolding events in Germany. Hello, and thank you very much for joining us today.
Hello, thanks for inviting me.
So does this 500 billion euro plan bring an end to the stagnation that has plagued the German economy for over 2 years? How much of an impetus could this give the German economy in reality?
It's going to be enormous, in all honesty. It's historic. Not only is it historic because Germany would then give up the austerity measures they have been using for the last 10, 15 years. It would also mean that over the next 10 years, we'll get a fiscal stimulus of more than 1% of GDP every single year. And if it really goes into infrastructure, this also means that infrastructure would not only boost the economy in the short run, it would also help really increasing and improving the structural growth rate of the German economy, which is so much in need of infrastructure investments. Because when you look at the German economy, they have done too little. Digitalization, conventional infrastructure. We've all been running behind the rest of the world. And this is one of the reasons why Germany has been falling on international competitiveness rankings. More than 10 years ago, Germany was top 5. Now we're somewhere between 20 and 25.
I'd like to talk about specific numbers. Goldman Sachs predicts this plan could add 0.2 percentage points to Germany's economy expansion this year. So the plan, if adapted quickly, could actually have impact this year. What are your thoughts on that?
I fully agree with that. But let's also not forget there's more than only this 500 billion euro plan. There is also more defense spending probably coming. What this plan will do, and we all know it takes a while before infrastructure spending is really implemented. But what this plan would do is it's going to boost confidence in an economy that has been in recession for more than 2 years in a row now. So just the confidence boost would help boosting growth. And if we then really see these infrastructure measures really being implemented, it would really help lifting off the German economy, whether it's 0.2% or 0.5%. But I fully agree that we will see in the second half of this year already some positive implications, and more would then unfold in 2026 and 2027. Because that is the good thing about infrastructure investment. They have a so-called multiplier of around 1, meaning that every single euro that you invest in the economy and infrastructure would also be paid back in the same amount in terms of higher economic growth.
So on the topic of defense, I just wanted to say that spending more on defense usually means spending more abroad. This is the case for Poland, for example. So it doesn't really benefit the economy. Is this going to be the case for Germany, because the defense sector is not really that big when you put it in the picture of the whole economy? So are the benefits going to flow to the wider economy?
That is a very good point you're making. And we know that over the last couple of years, since the war in Ukraine started, I think more than 80% of the EU's defense spending went elsewhere, mostly the US. So, of course, if Germany and other European countries were to invest even more now in defense spending, it would also require that the production capacities in Europe itself will have to be increased. So what I would expect if Germany and other European countries now really engage in more defense spending, that over time, we will also see that the production capacities in Europe will increase. So which means that over time, this would bring more positive momentum to the European economy. Right now, I think, and we have to be honest there, the biggest impact from everything that we hear on the European economy will come from this infrastructure investments and not from defense spending.
So let's assume that Germany's economic policy and legislation is adapted sooner rather than later. What is going to be the interplay between the benefits the extra spending provides and the hit that the German economy will take from Trump's tariffs and other factors?
Yeah, very, very good point you're making here, and no one really knows, in all honesty. But I think what we conclude is that we have two completely opposing trends. The one are these looming tariffs from the US on European goods, which would clearly hit the German economy, as Germany exports more than 150 billion euro per year to the US. So this would clearly then hit the German economy. Plus, it's not only about tariffs, it's also about tax cuts in the US, deregulation in the US, lower energy prices in the US, so which makes the US economy more attractive vis-a-vis the European and German economy. So that's on the negative side. On the positive side, we will get a confidence boost. We will get more infrastructure spending. And it's therefore a bit, it's like a race against the time on to see which of these two opposing factors will prevail and will be dominant. So which in my view means short-term outlook for the German economy is still a very cautious, rather negative one. But for the second half of this year, at the latest in 2026, then the positive impact from fiscal stimulus should clearly prevail.
So will the defense and infrastructure spending reposition Germany to its former glory? Because will this be that much needed boost for German manufacturing? Could, for instance, Rheinmetall be that saving force for the German economy? More jobs, for instance. What are your thoughts?
It's going to be a boost for the German economy, but unfortunately, it's not going to make a Wirtschaftswunder 3.0 automatically. Because that is something that is still, I think, not really getting enough attention, is that it has to go hand in hand with structural reforms. And this is a bit the disappointing part that we also learned last Friday, that the potential coalition parties in Germany agreed to an outline of how a coalition agreement could look like. And in this agreement, there hardly is anything on structural reforms. So yes, with this infrastructure spending, yes, with defense spending, we will get positive fiscal stimulus. We might have, in 5 to 10 years, a modern infrastructure again in Germany. But if we don't have the companies that are actually producing state-of-the-art products, we won't have strong growth. So this is the missing link right now to really get Germany back to its old glory. We need more than only this very historic fiscal stimulus package.
So it's not enough to have cash to rebuild and restructure Germany's economy?
No, it's like a little bit in football. Well, cash or money very often can score a goal, but not always. Which also means you cannot buy economic success only by money. You also need structural reforms.
Absolutely. So as much as there might be a sense of revival and excitement about what might be around the corner for Germany's economy, there's always a price to pay. So what might that price to pay be sooner rather than later, as we see that German borrowing costs are already going up?
Higher borrowing costs are clearly one price to pay, which would then mean there's what we call a crowding out, so that private sector investors, households, companies would suffer under higher interest rates and would therefore hold back their investment plans, their spending plans. So that would be one price that could be paid. The other price, I think, that is still a bit uncertain is actually, might there be higher taxes somewhere further down the road? And that is another thing. And we see it, especially in this outline pre-coalition deal, we see that this is like kids walking into a candy store and they take everything to the left and to the right, everything they always had been wishing for. But then at the end of the store, you get to the cash register and you also realize, hey, you have to pay for it. And this is also how this coalition deal looks like. A lot of interesting measures, tax cuts here, higher minimum wages there, spending money, but without really telling the people how it is paid for. And I think this is the big risk right now, that we have huge fiscal stimulus, but that in the end, it still ends up rather as government consumption and not so much as forward-looking investment.
But the analysis that's coming out of Kiel Institute still says that the pros far outweigh the cons of this plan. Do you agree?
I fully agree, because when I look back pre-elections, what did the country need? The country needed a breakthrough. The country needed a longer-term plan, and the country clearly needed fiscal stimulus. That was really needed. We already knew pre-election that there is an investment gap in Germany of 600 billion euro. So even more than the fiscal stimulus package announced now. So Germany, of course, needed this investment. So that is clear. That is what is needed. But Germany also needs reforms. And so therefore, we are looking into a brighter future for the German economy than at the start of the year. But this is not yet a very bright future.
Well, as much as you say all of Europe is looking at Germany at the moment. So how significant of a spillover effect could Merz's plan have on the European economy, and what impact do these decisions have on the EU markets? Or is it too early to say?
No, it's not too early to say, because this is what Europe has been waiting for over the last 15 years. Since the euro crisis, when the rest of Europe had to go through austerity, and Germany was actually one of the very few countries which would have been able to invest. And we know from research that if Germany does, especially infrastructure spending, this will have spillover effects to the rest of Europe. And that's very simple. How would this happen? This happens because it would open up these infrastructure projects to European companies, not only to German companies. And therefore, we would then see that other European countries would also benefit from this fiscal stimulus that we see in Germany. That is one thing. If Germany would finally grow faster than over the last 5 years, this would also benefit the rest of Europe, as Germany is, for most other European countries, the largest trading partner. So this could clearly be a win-win situation for Europe and Germany.
Absolutely. Poland's economic well-being, especially when it comes to exports, is dependent on Germany. So let's assume for a moment that Merz's plan is passed. How much will it influence the Polish economy, in your opinion?
It would also clearly benefit the Polish economy, because it would mean that there is a revival of German industry. It would also open up opportunities for Polish businesses, especially in infrastructure. And infrastructure is far more than only building some roads. It's going to be about railways. It's also going to be about renewable energies. It's also about digitalization. So all of this is something where also Polish companies could benefit from. But that's not even where it stops. So don't forget, Germany is a logistical axis in Europe, just geographically. And of course, if this would finally function again properly, if there wouldn't be any traffic jams on the German highways, if German trains would finally be reliable again, this would also benefit the Polish economy, as they are really so closely linked as two very important logistical axes between the west and the eastern part of Europe.
The analysis in Polish bank PKO claims that Merz's plan could actually push Poland to break the 4% GDP growth forecast for 2025 because of rising exports to a reinvigorated Germany. The government so far has put 3.9% in its budget law. Do you think that 4% mark is realistic, or beyond 4% even?
In all honesty, I think currently everything is realistic and none is realistic. And why is that? Because we are simply fishing. We've just had this announcement. It could very well be that we're going to speak next week again, and that the whole plan did not pass a Bundestag, and then we would have a completely different story. So I think right now, everyone is trying to get some idea of what it could mean for the Polish economy. Clearly, it could be a driver to bring Polish growth to 4%. But really, don't pin me down on whether it's going to be 3.8 or 4.1%. Well, I think what the base case or the baseline here is that if Germany now finally engages really in large-scale fiscal stimulus, the rest of Europe will benefit.
Okay. Carsten, it's been great speaking to you, and who knows, maybe we'll speak again next week or in 2 weeks' time.
But hopefully not then on the failure of the
Absolutely. Thank you so much for joining us. And we were joined by Carsten Brzeski, Global Head of Macro Research at ING. Thanks so much for being with us today. I was your host, Marie Cato. Join us every weekday afternoon for The Bottom Line at 5:10 CET on TVP World. And for the latest in regional business, follow us on X and on tvpworld.com. And for more news and analysis, stay with us on TVP World. Goodbye.